GMX. What's GMX? GMX is a perpetual exchange. What's that? All you need to care about is GMX is the next solution in trading on DeFi, no KYC, leverage, and not only that, but you can actually get exposure to the other side of that leverage, and you can provide liquidity for all those traders getting wrecked. So, how can you get involved and what can you do? We will be looking into that in this video. All right, wonderful. So, GMX. GMX is a decentralized perpetual exchange. What can you trade? You can trade Bitcoin, Ethereum, Avalanche, and other cryptocurrencies up to 30% leverage directly from your wallet. What's that? Yes, directly from your wallet, which means you don't even have to set up an account, deal with all the KYC. It's all directly on your EVM wallet. So what can you use? You can use MetaMask. If I go over here to connect, we get this little pop-up, Coinbase wallet, Wallet Connect, MetaMask. So pretty much any wallet that you can use on Ethereum, you can use on GMX. What are some of the benefits of GMX? Well, reduce liquidation risks. It uses an aggregate of high quality price feeds to determine when liquidations occur. This keeps positions safe from temporary wicks. So, have you ever been either liquidated or your position been cut out because of those fast wicks that happen on exchanges? This is solved on GMX by having a aggregate price on the price feeds, which solves that wick issue. You can save on costs because there's very low slippage, and you can also just use it as a simple exchange to swap. And why is it better? Well, just simply swapping and using the exchange feature, it has way less slippage and it has very good liquidity because of its solution to um, what is traditionally something like Uniswap, where you would have an LP. Here you have a very special solution, which is the GLP. So, what is GLP? What is GMX? Let's dive in a little bit more. So, if we look at GMX, it's a pretty nice exchange. We can go here, we can go long, we can go short, or we can just simply swap tokens. Right now, I am on the Avalanche network, but you can switch to Arbitrum network using Ethereum. And what can you do? Well, you can pay with different tokens. That means you can use USDC, MIM, Bitcoin, Ethereum, and Avalanche to pay, as in to enter your position. And you can choose what you're buying, which is Avalanche, Ethereum, and Bitcoin. On Arbitrum, we get some other options. We can see that on Arbitrum, we can long Ethereum, Bitcoin, Link, and Uniswap. So slightly different options on Arbitrum. Let's hop back over to Avalanche. And we can actually see leverage here. So we can choose how much leverage we want to use. We can choose what we will be taking our profits in. Most of the time, your profits will be taken in the token that you are longing. So if you're longing Ethereum, your profits will be taken in Ethereum. And then when you take those profits, you're going to have to go swap those profits into USDC. However, this is a really awesome exchange because you can actually manage your trades here. You have your positions, if you had positions open, your orders, your trades, and you can see there's been trades happening, and you can increase a short position, request increase, decrease a long position. So you can see how these different trades have played out for different participants. And you can kind of track different trades as well. So this is all open. This is all kind of free to use. We will be dropping a special link in the description. If you want to try this out for trading, you can get some fee discounts, 5% discount on fees. So you would just hop over to this referral tab. You'd go to traders, connect your wallet. You would input that special code, will be dropping in the description. And when you add that code, it will be linked directly to your wallet. So when you go and trade, you'll be able to easily already get that discount straight into your wallet, straight accounted to your account. So this is a quick overview of GMX on how to use it. You got your long position, you can place a market order, you can place a limit order. So you would long Ethereum, you would say how much, and then you would say at what price you would want to long it. So you can say that you're going to pay this long with USDC. You want to buy one Ethereum at let's say 15x leverage, and you want to buy Ethereum at 1800. So then it would tell you how much you're paying over here. You're going to be paying $122 to long Ethereum, one whole Ethereum, at using 15x. So this is a breakdown of your position. You have your leverage 15x, you have your entry price, you have the liquidation price. That is the price at which your position will be liquidated. However, you can set stop losses over here. So when you go to positions, you can manage your positions by opening a stop loss or setting a stop loss, setting a take profit. So this is really nice because compared to other dexes on DeFi, you can't set stop losses. You can't set those positions like predetermined. However, here you can set it all. However, remember that these have to be approved transactions, but you're pre-approving the transaction to go through. So you're going to have to accept transactions directly on your MetaMask wallet for all of these trades to fall through directly and kind of be be accepted before the time. You can always manage those positions and in your orders, and you can cancel orders, you can open orders. So you can do all that no problem. And if there's enough demand for it, I'm happy to make another video opening a trade, managing, and doing absolutely everything. We will set up a dummy account, and we will just do some of that basic trading directly for everyone to see. So if you do want that, drop some comments right down. Drop a comment, just say we want to see live trading demo so that you can get that full breakdown of how you can do everything. Next, we will talk about something very unique here, and that is the GLP token. What's GLP? GLP is a liquidity provider position. If you have ever provided liquidity on something like Uniswap, you offer Ethereum and USDC on both sides, and that is called an LP position, a liquidity provider position. And you're getting exposure to both sides, and you're earning rewards from that position. However, GLP is kind of an innovation in what GMX has been doing. GLP is very interesting because if we go over here, we can actually go to buy it on Avalanche, for example. GLP is a mix of many assets, not just one asset. It's a mix of all of these assets. So you're essentially buying a basket of different tokens, and you are providing liquidity to the exchange. So not only are you providing liquidity to all the trading pairs, but you're also providing enough liquidity for, as we saw over here in the trading, for anyone that wants to use the leverage. So GLP is very unique in that it divides your position into all of these, and then it keeps an equal weighting of all of these assets. So if we go back to GLP, the rebalancing, we can see on the dashboard actually how the GLP tokens are being balanced. So we can see the GLP here, and we can see the balancing and the weight of each token. We can see the GLP pool is managing 31% USDC, 15% USDC.E because it's on Avalanche. It also has ETH, it has Bitcoin, and it has uh, the AVAX token. And we can see how it manages all of these positions. It has very little MIM. So it looks like they have reduced the MIM usage in this pool, and they're focusing solely on USDC. It has almost 50% weighting into stablecoins and then 15% divided into the other three assets. So you can almost treat the GLP token as an ETF, for example, or just a basket of these prime tokens. And when you provide liquidity or when you buy GLP tokens, which you're essentially buying a cut into this basket, you will be earning fees directly in AVAX, which is something very unique. So if we look at the stats here, we can see the total fees that have been earned, and these total fees are paid back to GLP holders. We can see the volume and we can see the floor price fund, which is something we won't get into now, but it kind of shows the minimum price or the best price for that. So if we go over to earn, we can actually track all the GLP earnings here. We can see that the APR is right around 30%. 11% is paid in Avalanche, and 16% is paid in escrowed GMX. Escrowed GMX is a form of their GMX token, which we can see here, that is locked. So it's a special form of the token, but escrow GMX also earns interest, which is very nice. So you can earn it, incentivizes you to lock it up and earn more interest. As we can see, you can go down here to vest, and when you vest it, you're unlocking your escrowed GMX. So it unlocks it linearly, so you can kind of get access to it if you wanted to sell it. If you're staking GMX simply, you can also earn pretty decent fees. So what's very interesting about the model of GMX is that it doesn't pay all of the fees or all of the rewards in exclusively the GMX token. It also pays in the native token of what chain it is on. If we hop over to Arbitrum, we can actually see that it pays in Ethereum. So if you wanted to get exposure on Arbitrum, you would get Ethereum as well as the GMX tokens as part of it. So you would earn 25%, you would earn 13% on Ethereum, and 12% on the escrowed GMX token. If we go over to the weighting again, actually to buy, we go to buy on Arbitrum, the GLP, and we can see the different assets that are on Arbitrum. And we can see that Arbitrum has quite a bit more assets here. So maybe you don't want to have all of that exposure to it. Because as we have mentioned, you are essentially exposed to all of the assets in the GLP, and this can have its benefits or its kind of bad parts because we are exposed to all of the downside risk of these assets that we're buying into, this basket that we're buying into. We can see the weight, and we can also see the target weight versus the current weight. And what does this mean? Well, it means that more people, for example, are selling Ethereum versus buying it. So there's more Ethereum in the pool now than is the target. For example, here with Bitcoin, people are buying Bitcoin, taking it out. So there's less Bitcoin in the pool than what the actual target of the pool is. Similar with, for example, USDC here. There's less than the target. There's less than the target on Uniswap. So it's under the target on some of these tokens. And it's going to use its own algorithm to level it out. And every week it sets new targets and new weights to level it out and give that perfect weighting in the pool. So depending on what you want to have exposure to here, if you want to have exposure to Link and Uniswap, you'd probably you'd buy GLP on Arbitrum to get exposure to these. If you don't want to get exposure to all those and rather just have exposure to Ethereum, Bitcoin, and Avalanche, maybe you'd go on the Avalanche network and get exposure there. So something to note about this basket, this GLP token, is that it is mostly it's 50% stable coins, 50% volatile coins like Ethereum and Bitcoin. So having exposure to both of these can protect you on the downside, but it's also going to limit your upside to a certain extent because it's going to be selling into these stable coins as the price goes up. So it's just something to be love, because if we are in a full bull market, maybe providing liquidity to something like this isn't as beneficial as it would be to simply hold Bitcoin or Ethereum on as they rally. So it's something to be mindful of, but it's also something to think about when we're looking at the stats here in GMX, because maybe it's simply worth it to hold the GLP token just because of the numbers that they're raking in. If we hop over to the TVL, which is the total value locked on GMX, we can see that it's had a steady climb. It's had its peaks, as has the price in the crypto market. And even with these specific peaks, we can see that it's still generally trending up. It's been growing, it's been doing pretty well. We can actually divide this metric by people staking on GMX and people using GMX. And they've actually created a very nice profile here where we can track absolutely all of the numbers on GMX. We can see their total volume year since they launched is 31 billion. That's a huge number. Um, that means that that's all the total volume of assets that have ever been traded on the exchange. That's a huge number considering that total users are only 25,000, 21,000. However, one user can trade close to a million in volume if they're just going in and out of trades without having that large portfolio. So it's worth taking into account. However, all of that volume turns into fees, and that's something that's been very well managed by the GMX team because they've been earning really great fees. As we can see, 41 million since they launched is incredible fees. That is only on Arbitrum. If we go on to Avalanche, we can actually see all of the fees they've made there. We can see on Avalanche, they're getting close to 10 billion in volume and 13 million in fees. So we can see that they've had pretty steady growth, pretty steady usage, and that gives us some more trust and hope that GMX will continue to grow as an alternative exchange. If we want to dive a little deeper into the analytics, we can see how a DEX versus a SEX spot trading volume has been kind of increasing. So DEX is decentralized exchange, SEX is centralized exchange. An easy comparison is GMX and Coinbase, or Uniswap and Binance. So those would be the comparison, and we can see on this chart how the ratio had kind of spiked in September. DEXs were really popping off, and then it went back down a bit. But it's really been in a steady climb as people are choosing to go to DeFi over centralized finance, because there's always that risk in centralized finance of losing your funds and losing access to those funds. So finding these alternatives is going to be a great solution moving forward. And here at the Bird Nest, we'll be covering the best solutions for trading in DeFi. So if you guys have any questions, pop them in the chat. We're happy to answer the questions. We're happy to do a follow-up video on how to trade, how to use GMX. So we can get all of this information on the block in terms of DEX volume and trading volume, and we can find the GMX analytics as well. So we can see that they've had a very steady climb, and let's just bring it all back and recount what did we learn. So we learned about trading on GMX, how the platform works and how easy it is. We shared our referral. You can just look in the comments. Our referral code is going to be right there for anyone that wants to use it. You're going to get discount fees so that you can start trading whenever you are ready. And we also talked about GLP. Why GLP? Well, because GLP is a great way, if you don't want to trade, it's a great way to gain exposure to assets you care about, like Avalanche, Bitcoin, and Ethereum, as well as stable coins to manage your risk. So if you were to say, I'm going to leave crypto for a year because we're in a bear market, this would be a great solution, because you would simply be earning fees, which are, as we already saw, pretty strong on GMX. We were looking at the fees here, and uh, if we go to earn, we can see the total fees in GLP, which is 30%. No one's really paying you 30%. You're exposed 50% to stablecoins, as we saw here. USDC is the biggest holding in stablecoins, 50%, and the rest are assets you care about to accumulate in the long run. And all of these fees are going to be earned in Avalanche as well as GMX. And if you go over to the Arbitrum Ethereum layer 1 or layer 2, well, you would be earning all of these fees from Ethereum. So that's really good. A final comment on how do they make money? What's the risk? Why isn't everyone doing this? So the biggest risk to GMX and to providing your GLP is traders winning. And this is a very interesting thing. So all of their analytics are based off of traders losing. We can actually see it here. The traders' net profit and loss has been generally going down, and the total traders' profit loss, there's more traders losing than there is traders winning. We can see here, for example, trader loss, cumulative loss has been right around 30 million in cumulative profit and 35 million in cumulative loss. So total profit here is 100,000, whereas total loss is closer to 700. That's on the Avalanche blockchain. If we go over to Arbitrum, we can get slightly higher numbers in terms of total loss. So the protocol makes money by traders losing, as does most exchanges that offer leverage. We can see here the biggest difference in cumulative profit and loss is close to, let's check, right around 700,000. So it's quite similar, 400,000 on this day. And we can essentially see how traders are losing enough to pay these fees. So when do you earn fees? You earn fees when traders lose. 9 out of 10 times, traders will lose unless you're in the bird nest. Then you're probably going to be earning quite a bit more, and you're going to be on the winning side. But general, as a rule of thumb, the house is what wins. The biggest risk to GMX is if suddenly an incredible trader starts using it and only wins and has ridiculous capital and is only ever winning, then the GLP holders are essentially going to be paying out of pocket or out of their funds. So they have mitigated some of this risk by placing certain limits to trading, and those limits can be everything from max position size and max volume per day. So those are certain problems and certain things that they have implemented in order to protect these GLP holders. Another of the risks is if suddenly the market is looking bad and everyone shorts, then there's a big risk because you have 50% of your collateral here that is in volatile assets. And if people are shorting with stable coins as the value of these other assets is going down, then they can have a big risk of losing that liquidity side position because they're simply not going to be able to keep up with that liquidity. In order to mitigate that, again, they have implemented shorting caps per day and per size in GMX. So if you were going over here, shorting has a limit to how much you can short per day and how much shorting is available. So you can actually see down here the available liquidity. So it's the max short capacity or the max amount of shorts that people can do. And you can see actually how many people are currently in shorts. So this essentially is a way to solve and mitigate any risk from people try like suddenly everyone's shorting and then everyone that shorted wins, but then the house loses. So in order to protect the house, this is how they manage that risk. If you guys have any other questions, again, drop them in the comments. If you're not in the Burb Nest, use that trial link. You can always ask questions there. We're happy to answer. And then maybe you can be on the winning side of these GMX analytics instead of the losing side. So if you guys enjoyed this content, please subscribe, drop a like, and let us know what else you want to listen to. So happy to make this. Keep an eye out for the next videos on the Burb Nest. And I'll catch you guys in the next one. Peace.